Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We are now into a 3-day stretch that will land us on what I would consider to be day one of the Santa rally. So the Santa rally is going to be the 22nd to the 29th. And it's a tendency. It's not a setup. It's not certain to happen. But if there's going to be sort of an exclamation point on the window dressing that has lasted throughout December so far, we're going to see that concentrated into this period of time going into the last trading day of the year, starting with this Friday. Now, what makes this really interesting in terms of the timing, right? Everything is a countdown to something, gang. There are always catalysts. It's rare that we're up or down for no reason, right? So there's usually a catalyst. It might be data, it might be news, a Fed member, what have you. The catalyst that we have as of today would be a near-term catalyst and probably the least impactful of the ones remaining this week. And that's the CB, Consumer Board, Consumer Confidence Number at 10 a.m. Eastern. So roughly an hour from now, we're going to get some data that's going to create a little bit of a volatility event. And that's one of the things that if you're a scalper, if you took my last class and you're bot scalping, you definitely want to be in the Sector Secrets Mastery with the bot today, because that's going to be a really cool event for potential bot scalping. Short-term pullbacks, taking advantage of structure without the baggage of longer-term follow-through when we have this relatively important but minor hot zone, right? Now, the major hot zone still to come. Tomorrow's unemployment claims, tomorrow's GDP, and Friday's PCE. Unemployment claims are that weekly jobless claims number, and it's going to contribute to what the Federal Reserve determines has merit, because part of the Federal Reserve's job is to, of course, hit the inflation target without wrecking the jobs picture, right? They have a dual mandate. So employment is going to be a big part of that. Every Thursday, we get our little check-in, our little report card. GDP is a funny little data point now, because this Federal Reserve has decided that recession is no longer what we thought recession has been for decades, two sequential negative GDP quarters. We've had it, right? So even though the R word gets thrown around, gang, listen to me now, believe me later, from an economic, trading, investing standpoint, the word recession is clickbait. Trust me on this. It does not matter when the governing body of the monetary policy is determined that, we don't think that's a recession. So what is, Jerome? We really don't know. So that does undermine the value of GDP from a macroeconomic standpoint. Is it a major hot zone? Of course. 8:30 tomorrow, we're going to get this big data, but we really don't know what to do with it. We know we'd like to see GDP higher. Who does not want to see, right, gross domestic product higher? But then what, right? So very funny to talk about GDP as sort of a throwaway data point amongst major data points. And yet here we are. The big data point this week is Friday, PCE, personal consumption expenditures. What the heck does all that mean? It's even hard to say. Say it 3 times fast, right? What it is the inflation data point that the Federal Reserve is going to use in their models, okay? So ultimately, what we're going to have is a situation where Friday, the first day of maybe the Santa rally, becomes, in many ways, a reason to, number one, maybe buy strongly into the end of the year, Santa rally, or change our expectations for whether or not we should increase probability for and I'm going to show you right now what I'm talking about. Bear with me here one moment. There we go. So either we're going to change our expectations for probability in terms of, here we go, the March, the March rate cut. Right now it's at 69%. Gang, that March expectation continues to move higher. Once we hit 80, we're never going to know it's fully discounted. That's as if we can go around surveying every human in the market saying, do you expect a rate cut or not? But once we hit 80, Pareto principle does apply. And at that point, there's your tipping point. I would consider that fully discounted. We're just about 10% away. So that's pretty significant. PCE could change this. So we're going to look at this Thursday afternoon, Friday morning before that 8:30 data result. We'll see if GDP or even unemployment claims change it, but keep an eye on it every day, and most definitely immediately in front of these important macroeconomic hot zones. All right. Okay. So that's what we've got there. Quick 5-minute summary of what it is we are looking at and why, and what those catalysts could be for pullbacks or continued acceleration, and what we're looking at as we round out 2023. All right, so let's get to it, gang. As always, best part of our show are your questions, and we'll dive into the first one here from Cindy, who asks, can I ask what's my opinion of a soft landing? Could the stock market stay high while inflation lowering as well? I have no opinion, Cindy, and I'll be frank. What does answering, and I totally appreciate the question. This is the barometer. If I were to answer that, now what? Do you randomly buy? What's the setup in answering that? I've learned to ask less questions about the market, because certain things like what's going to happen, nobody knows. Certain things like soft landing. Remember, there's a whole narrative happening on television that doesn't even matter to anything other than the entertainment quality, right, of watching the market. Remember, certain television stations are modeled off ESPN. Their job is to watch Sunday football footage and make commentary. The other channel does the same thing, only with stock price. So what I'll say is, and I mean this completely respectfully, it doesn't matter. It doesn't matter. And it doesn't matter what my opinion is. It doesn't matter, because there's no trade at the other side of that. So I don't ever want to say it doesn't matter and that the curiosity isn't merited. But please remember, shut the television off, because that's a TV question. Shut it off. Doesn't trust me. I haven't given it a thought, because it doesn't matter. All right. But thank you, Cindy. I appreciate that. And remember, you might say, okay, Rog, I'll bite, right? What does matter? Watching price actions, watching price reaction to different economic events, different FOMC speakers. When we go into data points that could change our mind about the health of the US economy, and therefore what the Federal Reserve can do, watch the way price reacts with certain data points, like today's consumer confidence, like tomorrow's GDP. That's going to be the stepping stone to clarity. Not television, gang. Believe me, just turn it off. Find something. I mean, you're better off keeping Hallmark Channel on. Trust me, those are TV conversations. Those are not conversations that will help you become a better trader or investor. All right. Affirm. $, good name. It's an uptrend. Wait for a dip. Buy it. That's it. Follow the trend. Don't worry about overbought. Don't worry about where it's too high. Don't buy the high, right? Don't buy the new high. Wait for a pullback. It could be a 50% of the last major move. It could be a 34 EMA wave. It could be the 21, because this is kind of accelerated, but I would take advantage of a pullback, get long. And also, look back and say, okay, if AFRM is moving higher, what other stocks within that group are also doing the same thing? Is there perhaps a way to take advantage of an ETF? Things like that. All right. Michelle says, Raghee says, when you say, if you took my last class, are you speaking of the Sector Secrets Mastery? Oh, so Michelle, twice a year. Fair question. Yes, thank you. Twice a year, I have a class. We have a couple webinars. We do a Saturday class for about 4.5 hours. And then we have some live trading oriented to the lessons and tactics and indicators of that class. And I do that twice a year. The last one that we did was for, what was the last one? Oh my gosh, I'm drawing a blank. So about twice a year, I'll have a class. And so the Sector Secrets isn't a class. Sector Secrets, was it August, September. So when we are looking at Sector Secrets, that's a live trading environment. I'm sharing my trading ideas. Most of the time, I'm sharing a watch list. I think a lot of folks think that when I'm on the mic, everything's going to happen then. That's not always going to be the case, right? We do have a 9:30 to 4 world. And if we know what we're looking at, if we're already pointed in the right direction, and then when an alert goes out, now we know, oh yeah, we've been discussing this symbol, this index, this sector, this stock for days. And now the idea is ripe and ready to eat. So when we have our Sector Secrets Mastery, that's a live trading environment, and classes are separate. Classes are a cool way when the markets are closed on a Saturday to take a step back and really get much more granular and detailed and be in a more instructional educational environment as opposed to a live trading environment, right? So that's the difference. Yeah. And I do have a class coming up early 2023. And so if you're thinking, all right, Rog, I would love to have an immersion like that, stay tuned. Save some of that Christmas or Hanukkah or holiday money. Yeah, we'll be, we'll be having a class coming up, I think towards the end of Q1. So, and that'll be my next class. And usually it's 2 every year. All right. Next up is yeah, and the class I was talking about was the day trading class. The last one we did was the day trading class with hourly price movement ranges. So 5-minute time frames, very short time horizon, and hourly price movement range indicator. All right, no more FOMO. Hey, you said you busted out the second call. I am having it right now. Yes, I'm having it right now, Nomo. Really good. I will say, the Robusto Arabica blend was really nice. That was probably my favorite, but both of them are beautiful. And I'm having the pure Arabica one right now. I'd say your blend was probably the best bag of coffee I've had this year, bar none. Bar none. There's not even a close second, distant second. Yeah, I'd say that Robusto Arabica blend you did was just beautiful. Yeah, no jitters. Oh yeah, it was fantastic. I could go on and wax poetic about that coffee. Yeah, beautiful coffee. Yeah, Nomo, that might have to be the official coffee of the Sector Secrets Mastery. Very nice. Okay. Next up is, yeah, Michelle, here's what I tell you. I'm going to be the last person to tell you to go buy my class and buy my indicators. What I would really love, since you just mentioned you found me, head on over to either my YouTube channel, which is YouTube/Raghee Horner, or Simpler Trading's YouTube channel. Check out Charts and Coffee as you are. Check out Top Tier. And just, there's a lot of really great free information. So between now and the class, take in as much of that as possible. And then at that point, right, if you want to go with an a la carte class, it'll be available. But I really do try to put out as much by way of free indicators and free information as I can. I've been doing that for darn near 20 plus years. And I just want retail traders to succeed. And then once you know whether you like the way I look at the market, which is really important, gang, there's lots of ways to look at the broader averages and the indices and commodities, etc. So you go, you know what, that resonates with me. Then absolutely come join us in the mastery. Come take one of my classes. But I really want folks to be able to preview what it is I'm doing before they commit more time and money, right? I think that's only fair. All right. Magnificent Seven, bullish. No, I do not believe all Magnificent Seven are bullish. Well, some are more bullish than others. How's that? I wouldn't call any of them inherently bearish. My least favorite is Tesla, but I've been really open about that for a while. You might say, but why, Rob? Tesla's moving higher. Yes, but when you look back on the year, right? Microsoft has outperformed. Apple has outperformed. Meta has outperformed, right? So if you're looking at the very end of the year, yeah, I would not short any of the Magnificent Seven. And likely things like Meta, possibly NVIDIA, and Tesla are going to play a little bit of catch up now. But if I were to step back, and I don't mean today forward, but up until today, there have been other stocks in the Magnificent Seven that have been, well, more magnificent. However, to your point, it might be time as we wrap up the year to see whether or not some of the lesser magnificent stocks like Google, Meta, and Tesla start to play a little bit of catch up to the Apple, Microsoft, Amazons of the world. I would not short any of them. They are looking quite bullish. Amazon's looking fantastic. NASDAQ's making new highs, right? But what I would say is, yes, I would be bullish really anything within the NASDAQ that is a heavily weighted stock in XLK, XLY, XLC, and SMH. And those are the Magnificent Sevens. But more detailed wise, a lot of folks ask me, Rob, how do you grade a trend? How do you even recognize the quality of the trend in real time? And that's the multi-trend, gang. There's no better way than to do it because there's nothing black box or esoteric about it. Either it's green and we have green momentum, green trend, or it's yellow and there might be a neutral trend, or it's red and we have a downtrend. And we measure both. I measure both momentum and trend because if momentum persists, it becomes a trend. So it's important to look at both. That's why the multi-trend here for many, many, many years has had two rows, right? And I've seen many, many assessments of how to gauge a trend come and go. I have yet to veer from this one because it just works well. And this process has been tested over decades. So I have yet to find anything that gives me a better, clearer gauge of what's happening in that regard. So with all that said, as long as the multi-trend is registering green, I would be bullish. And then if it has been green and wobbled for a brief period of time going into the end of the year, it could be playing catch up. So yeah, you're looking at the history of this multi-trend, of the momentum and the trend assessment, and it just makes it really easy to understand. Yeah, it makes it really easy to understand. All right. Next up is, what was the last class with the scalping, the bot scalping? That was the last one from September, August. That was the day trading class. So I taught day trading with my hourly price movement ranges. We got into the Pingala levels, and then bot had a separate session, which is recorded. So you can still get that class if you're interested in the day trading, and bot threw in the bot scalping. Now, the next best thing, and maybe arguably better than the class, is go grab the mastery, because the bot scalps live in the room. And what better way to learn something than get taught and then watch someone do it in the current environment? So I would say if that's something you want to do, hop in the mastery, because bot has a session every week on the bot scalping, teaching the technique and doing it live. And she'll be doing that actually bonus session today. We're having a bonus scalping because she'll be doing the morning with you all today, which is going to be really cool because the hot zone at 10 is perfectly situated to be a potential bot scalping environment. I mean, we never know what's going to happen, but we look at probabilities. But the remainder of the week is going to be much more a catalyst for swings, which is something I'm super excited about as we go into the last week, possibly getting some swings. So that'll be really great. Okay, next up is San asks, I watched your video last night with a list of stock tickers going into Jan. Thank you. And noticed Tesla and my bullish Tesla. Yeah, San, for the same reason I mentioned All Magnificent 7. Is it my favorite stock? No, it's probably my least favorite of the Magnificent 7. But I can't not be bullish Tesla in terms of the NASDAQ, the S&P, and the XLY all moving higher. Those are tides. Those are the bigger groups of stocks that are moving higher. And Tesla is a boat in that tide. So if consumer discretionary and the S&P and the NASDAQ are moving higher, yeah, Tesla should benefit. But certainly it was not the focus, right? It's one of a few stocks, but definitely not the focus, because financials are moving higher and industrials are moving higher as well. So there's a lot out there. I am by no means fixated on Tesla, but it's not something that I would short. Right. And if I'm not open to shorting it, the other thing I would look for would be a pullback to the DPMR and getting long calls. Yeah. All right. Next up, Andy asks, important stuff here. Do I buy my coffee online? Most of it I do. But the coffee conversation earlier is we have a member, Nomo FOMO, great name, who roasts his own coffee. And he made me a Raghee, caffeinate, and dominate blend, 2 blends. And that was the conversation. He roasts them, and it's some of the best coffee I have had. Yeah, it's amazing. All right. Yeah, the Nomo FOMO coffee shop has got to open. Yes, that's going to be my goal in 2024. Nomo FOMO. Yeah, whether you like it or not, I'm putting you in the coffee business, my friend. But really, I love it. It's just really smooth. The last couple bags of coffee that I've been having get kind of acidic in the stomach. I don't with this. So yeah, it's really whatever unicorn powered roasting you're doing is good. It's good. All right. What else do we have here? Ashish asks, how do you download hourly price movement ranges and daily price movement ranges? There is a subscription-based version, but I do give a number of symbols included to my Sector Secrets Mastery. So if you're a new member, Ashish, if you're a new member of Sector Secrets Mastery, you'll notice we have the indices available as being part of the mastery. And if you say, look, I like these hourly price movement ranges, we have a subscription base as well. But totally up to you if you want to go beyond that, because the four most popular symbols are S&P, NASDAQ, Dow, and Russell, and we do give those to members of the mastery. All right, next up is, let's see here. And thank you for the question, Ashish. All right. Would Apple move with the Magnificent Seven, Lori, as long as NASDAQ's moving higher and XLK? Yes, I would not get short Apple, but hear me out, gang. Being bullish has somehow turned into buying at highs or buying now. That is not it. Before I buy, I am bullish. That's the precursor to action. So if I tell you I'm bullish XLK, if I tell you I'm bullish Apple, all that really means is that I am waiting for a buy setup, right? So if I were to say I'm bullish, it's not buy today. I'm not going to buy at a higher high. I need a setup, and I will be on the lookout for that. So I am bullish Apple. I would expect after the setup forms and triggers that the follow through would be higher. And then ultimately at that point, I can send an alert to members, and we can get long and hopefully enjoy some follow through. Yeah. All right. So that is it, gang. What I'm looking at here is overall, all right, overall, what I'd like to do is wait for the pullbacks. We know where the pullbacks may be, and in terms of uptrends, and then I want to take advantage of the catalysts. Okay, I saved the Forex question for last. I really don't trade Forex that much anymore. Eddie, no, I really don't do that much Forex. However, what's my opinion of the JPY? Remember, this is where Forex becomes a little convoluted. It depends on what you want to trade the JPY against, right? Now, if you want to be in yen versus US dollar, yen versus euro, yen versus Aussie, right? What I would say is anytime you want to trade currencies, figure out if you want to be a bull or a bear, and then that's going to determine the base currency or the second currency. Okay. All right, gang, be good to each other. I'll talk with you soon. Remember, gang, you've got bot scalping coming up in the mastery. All right. Take care.